This is a video about a really unique trading indicator known as the Trend Classifier by ChartPrime. Now, we all love a good trend in trading, but the problem is a lot of tools just show you if the market is in an uptrend or a downtrend, and really the insights kind of end there. But imagine a trend system where you knew how much it was trending, and just as importantly, when it wasn't trending at all. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any security on any time frame and click on Indicators, then type in Trend Classifier. It's going to be this one by ChartPrime. Ladies and gentlemen, this is the all-powerful Trend Classifier. It's a tool that does more than just show you the direction. It helps you categorize the market into simple phases so you can get a much deeper look at trend strength and momentum. It uses a special adaptive smoothing method to give you a really clear visual breakdown of what the market's doing. So the first thing you'll notice are these blue and red bands on the chart. Of course, blue suggests there's an uptrend and red suggests there is a downtrend. But the interesting thing about this indicator is how it helps us categorize the market into these simple phases. And this is where its numbering system comes in. You'll see little numbers, 1, 2, or 3, appearing right next to the candles. When you see a number 1, it suggests a weaker trend or a trend that is just starting, kind of preparing us for what might come next. A 2 suggests the market is really starting to kick into the next gear, and a 3 suggests the market is really starting to trend heavily, showing that there's huge buying or selling pressure. This is what you might call the big money phase. On top of that, you'll also notice the candles themselves change color. You've got your bullish for bullish and red for bearish. But you'll also see these orange candles. These are super important because they highlight areas where the market is not trending, warning you of a ranging or consolidation phase. It serves as a get ready or transition stage for the market. Next, if we take a look at the settings, the main thing you might want to adjust is the length. For traders that prefer shorter-term trend identification, like day traders, the length setting can be reduced, and for swing traders, the setting can be increased, which makes the moves on the chart even smoother and helps you identify those longer-term shifts. There's also a convenient dashboard that usually sits in the top right corner, showing you the bull versus bear strength in the market with a score from 0 to 3, which is a great little feature to get a quick read on momentum. Now, for how to actually use this thing in your trading, the most obvious way is to just follow the trend based on the bands and the candle colors. But where it gets really powerful is using that numbering system. For a bullish setup, you might see a number 1 appear as the market starts to rise. This could be your signal to consider entering a position. Then, as a 2 appears, it suggests the trend is getting stronger and you might consider adding to your position. And once you see a bunch of 3s, you know you're in a strong trend. This whole system gives you a kind of roadmap for the trend strength. And you can't forget those orange candles. When you see them and when that dashboard in the corner shows a bull strength of 0 and a bear strength of 0, the market is considered to be ranging. This is your cue to maybe stay on the sidelines and wait for a breakout or switch to a range trading strategy instead of trying to force a trend trade that isn't there. Now, let's go over a specific strategy for both long and short positions. For a long position, the first condition is to identify that the market is bullish. You'll do that by making sure the trend bands are colored green, with the price consistently trading above most of the bands. Once you've confirmed the bullish trend, you're going to wait for a pullback. This is when the price comes all the way back down, and during this pullback, we want to see the price briefly close under the middle trend line. You'll notice the candles are going to turn orange during this phase. To confirm the end of the pullback, we want to see a trigger candle that closes back above the middle trend line, and it's very important that this candle is colored green. But before you take the trade, there's one last confirmation. You want to look at the table in the top right corner and see that the bull strength is at least a 1 instead of a 0. This shows that the upward trend has strength. Once all that lines up, you can take a long position, placing your stop loss right under the most recent swing low, or you can even use one of the bands as your stop loss level. For the take profit, you can target a risk to reward ratio of 1 to 1.5 and let the trade run. Now, for a short position, you basically just do the opposite. First, you identify that the market is bearish, which is when the trend bands are colored red and the price is consistently trading below most of the bands. Then you wait for a pullback, where the price pulls all the way up and briefly closes above the central trend line. To confirm the end of this pullback, you're looking for a trigger candle to close back down under that central line, and this candle must be colored red. For the final confirmation, you'll check the dashboard and make sure the bear strength is showing at least to 1. Once you have that, you can take your short position. You'll want to place your stop loss above the most recent swing high and set your take profit at 1.5 times your risk. In summary, the trend classifier helps you stay aligned with the dominant trend while visually breaking down the market's momentum into different levels or phases. Instead of just telling you up or down, it gives you a sense of how much conviction is behind the move. It helps you see not just the trend, but the story of the trend as it develops from weak to strong to potentially just consolidating. And of course, just a disclaimer, this is not financial advice. The strategy I've talked about is just an example to show you how the indicator works. You should always add your own price action analysis or other forms of analysis to build a complete trading system that works for you. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.